Hello and welcome back to FinTech Festival India's final session of the day, everybody. Now, this session is an innovation talk on enabling ease of credit to the Vyapari of India. Presenting this talk, we have with us Mr. Rahul Jain, who is the founder of All Cloud. With that, over to you, Rahul. The stage is all yours.
Thank you, Amit. And it is great to speak on the concluding session of the micro experiences. And I'm sure we've got a much bigger plan for the March and the July event, and very eager to join that as well. The topic that I'm talking about today is how we can enable the credit to the Vyaparis of India. I think Vyaparis or the MSMEs have been the lifeline of the Indian entrepreneurial spirit. In the ages when visitors from different countries came to India, they talked about the bazaars of India. And I think even today, the bazaars are buzzing with the entrepreneurial spirit and the enterprising nature of Indians. And if you see the shift, it is from the mandis to the markets to online as well. MSMEs are present everywhere. And thus, talking about them is really important. So, yeah, over to our session, enabling ease of credit to the Vyaparis of India. But who are the Vyaparis and what do they constitute as part of our larger enterprise in the India Inc.? There are about 6.3 crore MSMEs in India. Just getting some facts on the table. They contribute to about 29% of the Indian GDP. And even during the pandemic, and even how we've discussed about MSMEs in our previous sessions, we've seen them that MSMEs were the first to bounce back, to get back, to rebound, because they're so agile. They adopt to things very quickly. And whatever is good, they're uptaking it, and whatever is bad, they're leaving it. That way, you see a very sharp increase in the digital payments. About 72% of them have moved to digital payments and have been using them. But look at the credit gap. It's about 25 trillion. Looking at the landscape, this is just to give you an understanding of how the large enterprises and micro and medium enterprises are, how many numbers are there. So if you look at it, it's about 52 lakh large enterprises, but they're taking more than 65% of the total credit exposure. Their contribution to the GDP is 70%, but if you look at the exports, they're just contributing 51%, and MSMEs have a 49% stake. Exposing MSMEs to better credit, increasing their credit exposure would definitely have a major impact on their contribution to export. It will surpass the large enterprises, and their contribution to GDP will always increase. MSMEs are something that we, in our day-to-day lives, are interacting with. And smaller significant changes will definitely change the way the credit is being delivered, and they are using it. It will go back to the whole ecosystem of India INC. But at the lending scenario, if you look at the MSMEs, they are more about equally proportional between the rural and the urban parts of India, Bharat, however you put it. But the problems are very similar. They do not have credit visibility in the sense the banks would like to see it. The data is quite unstructured, asymmetric, and their operations are very cash incentive. How do we put all of this together to create better credit products for MSMEs? The problem also is that it's a higher TAT when you want to lend to MSMEs. We're seeing TATs from about 18 to 30 days between different kinds of lenders. Again, discussing some effort, what a lender needs to lend to an MSME is more effort on the disbursement front. But for a larger enterprise, the more effort is on the collection front. So you see 19% NPA being on that side and 8% NPA being on the MSME side. Why I call it a larger effort to disburse money? Because it's a very high touch point. You need to be with the merchants. You need to be to their stores, their factories, their outlets to understand the business, and then collect data to be put into a credit model that can evaluate them to the capacity, capability, and the intent to pay back. The collection effort with MSMEs are going to be significantly less than the larger enterprises. It's going to be manual, it's going to be intensive, but the efforts are going to be significantly less when compared to the large enterprises. Let's look at this case study. I was also started to see, the MSMEs need credit in a day, 2 days, or 5 days, 7 days. That it's a very short gestation period for them, and the need to credit and to suffice it. But what happens in a typical structure is that they start looking for credit, and in a formal sector, they take anywhere, as I said, between 18 to 30 days. But on day 5, when the money is most needed, they move to the informal credit pattern or the sector, informal credit sector. With this, their needs get satisfied. Even though it is costly, the terms are not that great, but then the need is met. And because of this, they are not able to join the formal credit sector. Lots is being done. A lot of players in the FinTech, a lot of players in the banking sector are now addressing this need, making the MSMEs and the smaller businesses more visible to credit. I think it's a great step. By giving them smaller amounts of credit, by delivering the credit the way they want it, we can still get them back to the formal credit sector and increase their share of credit exposure. Now, why they are not able to do it very effectively is also because of the diverse nature of the businesses. An MSME is anything between 5 crore and a smaller business is anything between less than 25 crores. So, and the kind of style is very different. A handicraft enterprise and a welding enterprise, or for that matter, a beauty parlor is starkly different to a laundry. And a poultry farm is definitely different like a retail. The way they manage the business, the way they run the show, the way they keep their accounts and their credit needs are variedly different. And that's the reason we need to look at technology, how technology can solve this, both from the lender's perspective and also from the borrower's perspective. Because it's not going to be easy only changing the scenario at one side. If you're going to make the MSMEs more credit visible, is it going to solve the problems if the technology to serve them is not created? We've seen for long that technology has been created to cater to the needs of larger enterprises, to make meaningful model out of structured data, to read the balance sheets, to go to the MCA, get down the data from the GST, put it together in a model, and then come out with insights. But fairly less has been done in the technology side to cater to the MSMEs. But today, there is a lot of difference because people are moving to domain-based lending. And that's what we've also done in the past. We've created models to address different kinds of lending. We've created a credit model for dairy. We've created a credit model for poultry. We've also created credit model for smaller MSMEs in the manufacturing segment. This way, this very domain-specific model helps lenders to assess the borrower or the MSME, not just on what is the need for credit, but what he can pay, how much is the expense, how much is the income, and what are they going to do about the money. This needs a lot of effort. It's a high touch point. They need to meet the customer, gather the data, which is more manual, and they can make it digital. It's more phygital rather than digital or manual. They need to put this all in one algorithm that a domain-based layer can get in the whole lending ecosystem. Now for this, you need to have a structured approach where you can blend both the data, you can make it more easy, and also across integration points, you should be able to collect more data. And the onboarding channels could be mobile, web, everything, it is all enabling the larger decision to lend. Now, if you look at a domain-driven lending, why I call it domain-driven lending is because you need to understand the need of the MSME, what it is going to be, whether it's going to be from the decision-making side or also from the collection side. You can have a 5-day loan, you can have a 10-day loan, you can have a 1-day daily repayment, you can have a weekly repayment or a monthly repayment. Each will have its own characteristics based on the business that they do. And that's why I think a sample journey that we could help us, we've been helping people to create and we can do more on it, is something like this, where it's mobile driven, very quick to, digitally collect the KYC documentation, but again, manually collect the data, making it more digital in approach, and then putting it to a credit model and coming out with a automated decision to lend. This way, the 30-day TAT can be moved down to about a 2-day TAT at the max. That includes disbursement to the customer's bank account. With this approach, the MSMEs can come into the formal sector. They can enjoy all the benefits what a bank or an NBFC or a lender at size can offer them. They don't need to go back to the informal sector ever again. On the LMS side also, let's look at what kind of products they need. The kind of product they need is also same with a larger enterprise, but it has to be modeled according to them. They still need supply chain financing, but at a very less scale. They need invoice discounting, but how do you validate it? Tech can enable all of these cross-validation between platforms. Invoice discounting can be done, a line of credit can be given, a BNPL can be done, a term loan very easily can be done, and with varied interest cycles, varied EMI cycles, like a monthly, daily, weekly, 7-day, 5-day, based on the product that you're wanting to offer. On the collection side, when you look at MSMEs, you give MSME loans, but you work like an MFI. You meet them, you talk to them, you enable them to make payments more often. And that's why I said earlier as well, the collection effort is much lesser than a larger enterprise, but you need to be with them. And that's why work like an MFI, but do MSME loans is what I feel is the best way to collect money from an MSME borrower. And more on our technology, I think we are the tech fin. We want to be a tech fin for MSMEs. It's a SaaS product, a low code, giving you the agility because your customer are agile, right? Once an MSME, there could be a change in pattern of business. You want to add on new products. But if the system is legacy or it is hard coded in a way that you can't make changes overnight, then it won't serve your purpose. A low code approach where you can plug and play, change models and deliver it in the real time will be the most useful solution for MSMEs and their lenders. So I think that sums up the concluding session of the India FinTech Festival with me, talking about MSME and what we are doing in MSME lending, definitely enabling credit to more Vyaparis of India, and look forward to doing that again and again. Thank you.
Thank you. Thank you very much, Rahul, for that wonderful presentation. And with that, now we have come to the end of this panel. And with this, we have also come to the end of FinTech Festival India's Mumbai Micro Experience. Now, we will see you all again in FinTech Festival India's digital main event on March 1st, March 2nd, and March 3rd, with 2 days of thought-provoking discussions around financial technology and ecosystem, and a day-long masterclass that we are pulling all stops to bring you an unforgettable experience with FinTech Festival India. Now, to register yourself, you can visit our website on www.fintechfestival.in. You can find us on LinkedIn, Facebook, Instagram, or Twitter, and register yourself to attend the FinTech Festival India's digital main event. And with that, FinTech Festival India would like to thank our associate partner, Niti Aayog, our hosting partner, World Trade Center Mumbai, our sustainability partner, the Green Billions, our supporting partners, MeitY, MSME, Government of Tamil Nadu, Guidance Tamil Nadu, Startup India, ELCOT, IREDA, APEDA, BESIL, All India's Association of Industries, and FinTech Association of Sri Lanka. A special thanks to our powered by sponsor CoinSwitch and gold sponsors Life Insurance Corporation of India, Rapid Cloud Solutions, MoEngage, and our payments partner in Solutions Global. Thanks also to our main event silver partners Amber Group, CN.com, SafeXPay, Nucleus Software, and Zimperium, and our main event bronze partners Morningstar, our micro experience silver partner Perfios, our identity verification partner IDFi, digital editions partner Juicy Score, our micro experience bronze partners Lemon Yellow, Crystal.ai, All Cloud, Figo, and our micro experience networking partner Neosoft Technologies. We would also like to thank our micro experience workspace partner Weaver and our micro experience RegTech partner SignG. And going on, we would also like to give a special thanks to our micro experience city partners, Partner Hub and Decimal Technologies, micro experience session partners, KSolve, Cash.com, Spice Money, Minko, and FinSpot, our key exhibitors, FinTech Square and AccuraScan. We would also like to thank our knowledge partner, Ernst & Young, innovation system partner, T-Hub, our ecosystem partners, FinTech Association for Consumer Empowerment, India InsurTech Association, Thai Delhi NCR, India FinTech Forum, 10,000 Startups NASSCOM. And we would also like to add a note of thanks for our investment partner, IVC Association, Innovan Capital, and Kona Capital. Our strategic partners, Findexible and Cedar Management Consulting International, LLC. Our state innovation partner, iCreate. Our startup ecosystem partners, Startup Grind, 10,000 Startups India. Our blog partner, ED Times. And finally, our PR partner, AdFactors. A huge thank you once again to all partners, speakers, delegates, and Team Constellar who collaborated to ensure the success of FinTech Festival India's Mumbai Micro Experience. Remember, we will be back on your screens on March 1st, from March 1st till March 3rd. Till then, you take care, stay safe, and register yourself for FinTech Festival India's digital main event. Have a great day ahead, everybody.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू।
हाँ कर सकते हैं।
नहीं कर सकते।
लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fago, a pioneer in the world of intelligent open finance. With our full-stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With a complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.